Welcome to part 2 of filing time. In part 1 of this episode, we got a to-do checklist before we begin the filing procedure from the expert himself. ADG 3, Directorate of Systems, Shri Ramesh Krishnamurthy, is here with us to guide us through the crux of the matter now, the actual filing of your return. Welcome back, sir.
Thank you.
Sir, once the details are all ready with the taxpayer, like what we had discussed in the first part, now to go and actually file, taxpayers usually have to choose one of the different ITRs that we have. Now, how does one choose the right ITR that suits his particular situation?
Well, Subhash, thank you. So first, I would just like to take one step back before even selecting the ITR. Just like to mention that on the e-filing portal, there are two types of facilities available. One is online ITR filing, and the second is offline ITR filing. So in the case of offline ITR filing, the taxpayer can download the entire software onto his desktop or laptop, and then he can start entering or preparing his return. In the online, he can go to the online portal itself, and the ITR will open up in his portal itself, and then he can start filling up. As I said, already we have done some amount of pre-fill so that he doesn't have to key in a whole lot of details. Now coming to the question that you had asked about how to choose an ITR. Now obviously the selection of the ITR depends on the kind of source of income that you may have. But what we have done this time is that to guide the taxpayers, because there are many various situations under which different types of ITRs may become relevant for the taxpayer, we have provided a guide, and that guide is basically nothing but a kind of a wizard based questions. There will be questions that will be asked from the taxpayer. As and when he is answering those questions, the software will help him decide or make a choice whether he has to select ITR 1 or ITR 2 or ITR 3 or ITR 4. To give you a simple example, if he has got income from business, if it is maybe a proprietorship or a small business, then he can't file ITR 1 or 2. He has to either file ITR 3 or 4. So the questions will help him guide towards ITR 3 or 4.
Okay. Sir, there's one question that we often receive is, let's say there's an individual taxpayer who's a joint owner of a property along with his spouse and with no additional ownership of any other asset. So would he be able to choose ITR 1 and file his return?
Yes, Subhash. So ITR 1 is the simplest return. It is filed by more than 50% of our income tax returns are ITR 1 only. It is filed mostly by salaried people or people having one house property. It can be a joint ownership, but as long as it is one house property, he can choose ITR 1.
Okay, okay. And sir, in the case of a deceased person who has passed away, what would be the process for a legal heir to pass the to file the return of the deceased person?
So, see, in a very unfortunate or incident that a person has passed away, then the survivors, that is the legal heir, has to complete the filing process on behalf of the deceased.
Right.
So what we have given is a facility on the e-filing portal that the legal heir can go to the e-filing portal, log in, and then he can under authorized under the menu item called authorized partners, select himself as the legal heir, and then he can fill in those basic particulars. He has to upload documents like, for example, the death certificate of the deceased and all that. Once this process is approved by the department, then he can log in under his own PAN, and then he can then go ahead and file the income tax return of the deceased. He doesn't have to use the PAN of the deceased person.
Okay. So now we also have the new tax regime where we expect the individuals to opt for it. So how would he do it, or what are the benefits of this new tax regime?
Subhash, this is a very important point to note that under the new tax regime, the taxpayer has an option to select that. It gives you certain advantages like a lower tax rate. So the tax rates are all available on the website. But to give you an example, the tax rate for a normal, under the normal tax rate above 5 lakh income in the case of a normal taxpayer, the tax rate is 20%. But under the new tax regime between 5 lakh to 7.5 lakh, the tax rate is at only 10%. But if you opt for the new tax regime, then you are not allowed to take certain deductions or exemptions. So the taxpayer will have to choose which is more beneficial to him. If he has got deductions under ATC, he has made investments under National Pension Scheme, if he has got donations, and if he has health insurance premia and all those other kind of deductions that he has, or if he has interest from housing loan. So these kind of deductions that are available in the normal tax regime are not available in the new tax regime. So the new tax regime, the tax rate are lower, but deductions are not available. In the old tax regime, the deductions are all available, but the tax rates are higher. So he has to weigh that, and then he can go ahead. So there is a simple, for ITR 1 and 2, it is a very simple thing. He can just, there is a checkbox, he can say opt for the new tax regime. If he does that, then automatically the deductions and all that are grayed out, he will not be able to claim them. Automatically the tax that is calculated is on the basis of the new tax regime. So this is a very simple process. And if he has to see what is the difference, there is a link that we have given on the Income Tax India, the main website, that is www.incometaxindia.gov.in. In there is a tax calculator. He can use the tax calculator and put in all the figures to see what is the net tax rate that he may have to pay.
Okay.
And if he finds that it is beneficial, then he can go in for the new tax regime.
Okay. So sir, now let's say someone chooses to opt for the new tax regime, but then decides that perhaps he's better off in the older regime itself. So then what is the way out for him?
So as far as the salaried person is concerned, that is any person having ITR 1 and 2, he can opt in and opt out. It's a very flexible kind of an arrangement. Supposing this year new tax regime was beneficial, and next year for him the old tax regime is more beneficial, he can keep opting in and opting out. However, in the case of a business taxpayer, any person who is filing ITR 3 or ITR 4 or maybe ITR 5 and 6, let us first talk about the individuals. They have to file a Form 10IE that has to be filed prior to filing the return. And then this once he has opted in for the new tax regime, he can, if he opts out, then he can't again come back to the new tax regime for the next 5 years. So it is like a lock-in kind of a thing. If he is supposing this year he is still in the old tax regime, next year he can definitely opt in. But the year after, if he is opting out, then he can't again opt for the new tax regime. So it is like a slightly more, I would say, fixed kind of a locked-in kind of a period for a business person. But for salaried individuals, he can opt in and opt out. There is no requirement for filing any form. Every year he can change his decision.
Okay. Now, let's say, sir, there's a taxpayer who who's a salaried taxpayer who also has income from other sources. Would she also be required to file her Form 10IE in that case?
No. So just to clarify, for anyone who is filing ITR 1 or 2, there is no separate form to be filed. There is only a checkbox in the return itself where he can opt for a new tax regime. It is only for ITR 3 or ITR 4, people having business, a separate Form 10IE has to be filed.
Okay. Now, we have talked a lot about pre-filling of returns with data that the department already has, that it has collected from a lot of entities. Now, what if a particular taxpayer finds that this pre-filled data is incorrectly filled? What can he do about it?
So there are two things. One is that in the annual information statement, on the online portal itself, there is a facility for giving feedback. So the taxpayer can say that this data is not correct, and then based on that, the data in the annual information statement gets corrected. Since we are pulling that data from the annual information statement, that pre-fill also will change, but that will take time.
Okay.
However, what we have also done is that none of the pre-filled data is fixed. It is all editable. So the pre-filled data that has come in from various sources, the taxpayer can go and edit. He can make changes, he can add, he can remove a particular row, he can, supposing something was omitted, he can add, Suppose something was wrongly entered and he wants to delete it, that is also possible. So in the, as far as the ITR is concerned, whatever the taxpayer is filling is the final value. The pre-filling is only meant to aid him. It's only meant to help him, and it helps as something like you have forgotten something, it is available. But if that is why if you recall in the first part of the session, I spoke about the need to cross-check or cross-verify.
Right.
He must have all the original sources, bank statement, everything with him, so that he can cross-verify. And if there is any mistake, he can edit it in the ITR.
Okay. So one common issue that we find is people start to file the returns, and then sometimes they they face issues like they're unable to find the schedule, or the tax is being calculated at the normal rate instead of the special rate, and cases like that. So how should a taxpayer address that?
So as I was talking to you about the software utility on the online form or the offline form, first the wizard or the helps you select which are the schedules that are applicable to you. I'll give you a simple example. Supposing the question that is being asked is that, do you have any house property rental income? Supposing you have said no, then automatically the house property schedule is not relevant for you. But supposing you didn't understand the question and you made a mistake, and you realize that no, you have to enter rental receipts, then you can always go back and select that particular schedule. There is a schedule tab, and there are list of schedules that are going to be visible to you are available, and you can make changes. As soon as you enable a schedule, that will become available for you to enter the data. So that is one thing. And the second thing is that you should also know that nothing in the ITR is very flexible. You can always go back and correct your mistakes. So there is a draft also available. You can save, you can take a printout of that ITR. You can verify again whether all the details you have filled is correct or not. Then you can go back and make some changes. If you have omitted something or made a mistake, you can change it.
Right. So carrying forward of losses is something which is very crucial, which many of our taxpayers do. So there have been some instances where taxpayers found it difficult that even after filling it in the schedule, I think schedule CFL is the one that we used for carry forward of losses, and when there was income that was available in the current year, they could not adjust it in the schedule. So how does what is the step that they need to take there to resolve that issue?
So typically for salaried people, the most common thing that would be available is the carry forward of loss from housing loan interest.
Right.
So that comes forward from previous year. So that whatever was the loss from the previous year, that has to be entered in the schedule CFL.
Right.
Once it is entered, then there is a button in that software utility which says compute set off. So there is another schedule called brought forward loss adjustment, BFLA. So there you have to go and click on compute set off. So once you do that, the software will automatically take the losses of this year. If there is any income from the present year, it will set it off, and the balance will go back as taxable income for the current year.
Okay. So let's say we have a taxpayer who opted for the presumptive taxation scheme under 44AD, and then for the next 5 years he doesn't opt for it. What is the outcome of such a situation?
So as you have rightly pointed out, 44AD envisages a lock-in period of 5 years. So if you have opted for 44AD presumptive rate of taxation for this year, then it is expected that you will continue with 44AD for the next 5 years. Supposing you want to opt out and next year you don't file your return under 44AD, then you can't opt in again. So it is like a one-way kind of a thing. If you have opted out, then you can't again opt in before the next 5 years. So it is like if you have opted in, you stay for 5 years.
Right.
If you have opted out, then you can't again opt in again till the completion of 5 years.
5 years. Sir, we also have situations where people earn long-term capital gains from shares or sale of securities. So in that case, how does he or she disclose this income in the ITR?
So Subhash, this is something that all the taxpayers must be aware. We have provided details of sale of shares and mutual funds in the annual information statement. So it is a guide for the taxpayers to know that all the sale transactions are recorded. He can go back and to the ITR and fill up schedule 112A. Most of the residents will file 112A. In case of non-residents, they can use schedule 115 AD. So 112A is the section where you report all the long-term capital gains from sale of shares, equity, mutual fund, and things like that. It also provides for columns where you can report the fair market price in January 2018, which is when the capital gains on sale of equity shares came in. And then the other thing to note is that you have to provide information of the quarterly breakup of capital gains in the capital gains schedule, so that then the interest under 234C can be properly computed. Second thing that to note is that the taxpayers must report the capital gains in the schedule SI, that is the special rate income schedule, though there is an automatic linkage, but that must be verified and it must be reported there because this is taxable under special rates. I would also like to highlight here that dividend income is also important to note, that it is also a part of the annual information statement. There the taxpayer has to show the dividend income in the schedule income from other sources. And I would also request all the taxpayers to report the quarterly breakup of the dividend. This is important because if the dividend is earned in the last quarter of the year, then he doesn't have to pay advance tax right from beginning. So he can file advance tax only towards the end. So that way the 234C interest for deferment of advance tax will be properly calculated if he reports the quarterly breakup of dividend income.
Okay.
So these are some things that the taxpayers can note.
Okay. So thank you, sir, for taking us through the most frequently asked questions and queries in respect of the actual process of filing a return. I'm sure our taxpayers will be greatly benefited by this. So as we tread carefully and ensure to pick the right ITR form and the right schedule to fill in our details, filing time in the next part of this session shall be taking you along the final stages of the return filing procedure. That is verification, refunds, and the rest. Thank you for joining us in this part of filing time, and we look forward to join you in the next part. Jai Hind.